2017, it's 2023 now.
Yeah.
So over that 6-year period, it has substantially changed. Some of the areas are just completely renovated, completely redone. There's a huge flow of money from developers going into like the Blackstone area, the Benson area, so downtown area, the Old Market area, all of these little hubs that are getting a ton of money pushed into them. And with that, naturally, people want to stay and enjoy those areas. It's becoming a lively place for younger population, and that's a huge demand opportunity.
Yeah.
Yeah.
Yeah, when people are thinking about starting investing, we always recommend starting in your own market. Even if you're in a market like in San Diego where things are way more expensive than other places, always look in your market first. But if you're looking to go outside that market, again, the Midwest is definitely attractive.
Yeah, you don't see the massive swings up, but you also don't see the massive swings down, right? And that stability is the sexy piece.
Absolutely.
Right, that is what makes the Midwest one of the sexy parts of the Midwest.
Yeah.
All right.
Oh, Adam. Hey,
how you doing?
Nice to see you, bud.
Yeah.
Thanks for showing up.
Adam Rare here.
Hey,
how you doing?
Hey, we were just having a conversation. We want to take a survey, poll, whatever you want to call it. Should the camera that's facing Adam that only shows him, should it be in 4K, you guys think? Or should it be in like 520p, so it's pretty blurred out and you don't have to look at that mug? What do you guys think? Type comments in below, smash the like button if we should do the lower res so you guys don't have to look at his mug.
I think it should be augmented reality, so like you can actually see my face right here. That would be pretty sweet. If they could listen to our audio and just have our faces right here, mainly me. Maybe it just kind of cuts you out.
No.
Oh,
No.
okay. All right.
That's a stupid idea.
Yeah.
Okay.
All right. Moving on.
Yeah.
Here we are.
So today, bud, we are going to talk about why is Omaha, Nebraska sexy?
Yeah.
I don't know if too many people have used Omaha and sexy in the same sentence, but we are today, and we're going to try to prove why Omaha is sexy.
And even we're going to talk specific to Omaha, but it's really kind of Midwest in general. Why we go after the Midwest, why we've chosen the Midwest as, and kind of Omaha has been kind of our home base, we'll call it. And then the ancillary markets from there of why we've continued to grow within that specific area and continue to grow within that area. Why we think the Midwest is sexy. And we're using Omaha, Nebraska as kind of our use case and specific to be able to share some statistics and talk through a city. But a lot of the same fundamentals apply across those Midwest towns and cities that we continue to invest in.
Absolutely. So I guess to start off, for us in the Midwest, one thing that attracted me to the Midwest was, one, obviously from here, grew up here, have family here, whatnot. We moved down to Arizona about 12, 13, 14 years ago, and started investing down there. But what was always attracting me back to Nebraska was the affordability of housing back here compared to being, again, down in Phoenix area. It's real estate was a fraction of the price. Down in Arizona was buying $300,000, $400,000, $500,000 houses to flip at those price points. You really can't cash flow those for rentals at all. So your main strategy down there was flipping, to where back in Nebraska, back at that time, the median house price was probably, just kind of making this up, probably $200,000. So a fraction of what the cost was in Arizona, and they had cheaper houses. They had houses that I bought for $15,000, $20,000, $30,000, and places you could actually cash flow down here. So coming back to Nebraska and really looking at it, one thing that was really attractive for me was, again, affordability. And I've said this before, as when I was getting out of the Arizona market a bit, or starting to sell stuff off to invest more in Nebraska, one of the last pieces of property I sold was just a small little condo in Phoenix. Sold that guy, and with the proceeds from that one condo, was able to buy 5 houses back here in Omaha with it. So that started to really explode the cash flow of my rental portfolio, and also helped start the snowball effect of growing that rental portfolio quite a bit. Was cheap houses, more or less.
Yeah, absolutely. Because that aggregate when you look at, like, for instance, I'm from San Diego, so to buy a single family house, you're in the upper hundreds of thousands of dollars, right? You're might be 700 to a mil, if not more, for a property, and your rent would be higher, but what you could go buy in Omaha, you could cash flow significantly more. You may not be able to cash flow in a place like California. In long-term rent, it's really, really difficult to cash flow in California, whereas you come out here and you're cash flowing left and right because you just picked up, my first house was bought through you, 3-bedroom, 1 bath.
Got you good.
And bought it for 63 grand. Got a mortgage on it for 50.
Yeah.
And so I was only in for 13, 15 grand, something like that, when you had it added in the closing costs. So,
and you recently sold that guy too.
I did. So after 5 years, sold it for 140K.
Yeah, that's killer.
And I was cash flowing during that time period. I had rent at right around $1,000, and increased that up to, when I sold it, was about like 1150. So 1,150.
That was all
per
because
month.
All because of me too.
Yeah, you were a sucker, and we're selling off just gems and deals, man. Yeah, thank you for teeing it up for me. Yeah, I appreciate that, man.
Thanks for giving me some money after you sold it, man. I really appreciate that. Thank you.
Yeah. It must have been lost in the mail. I sent you a package of money, but it just...
A package of money?
Yeah, it was a package. But maybe I'll just send you some lollipops or something. I know you've been into that lately, so...
Got me.
Yeah.
Thanks, bud.
So anyway, I mean, you look at Omaha, for instance, median home price, $221,000.
As of a few years ago.
Yeah, as within the last couple of years.
Yeah.
And then you look at median rent for a 3-bedroom house is right around $1,500, $1,495. So,
which has exploded the last really, and then this is kind of the same way across the U.S., but Omaha in particular, that same 3-bedroom house, from my personal experience, 2 or 3 years ago, things depend where your house is at, quality of the house, things like that. But in the specific areas I'm in Omaha, that 3-bedroom house, let's say 2 or 3 years ago, was probably $1,000. $1,100, and just with the demand growing for rental properties, especially quality rental properties, now, yeah, it's easy to get 14, 15, even $1,600 in that same area that I'm in, just because demand's gone up so much.
Yeah, absolutely. So that cash flow ends up significantly impacting your overall profitability, and being able to pay the loan down quicker, or go rinse and repeat and go buy other properties.
Buy more stuff.
That just margin that you can make and cash flow that you can make out here is just something completely different, night and day, than what on the West Coast, for instance, right?
Absolutely. So yeah, when you were starting to look at markets to invest in, obviously we connected fairly early on in that process, but what were some of the other things that attracted you to Midwest and Omaha per se?
Yeah, one of the things that I look for is strong job market. What are the roles, what are the jobs in the area that are going to be able to continue to support the demand for rent, along with continued increases in rent each month. So if you have high paying jobs, naturally they're going to be looking to put that into where they're living and feel comfortable and happy with where they're at. And so with that, you end up with higher income opportunities when you have higher income earners. That's a really big, important piece. If people in the area don't really have money, you're not going to be able to fetch the highest returns and the highest rental income through that area, right?
Yeah, and kind of going back to the affordability piece too, there's starting to be a lot of bigger companies coming to Omaha and establishing their headquarters here, and or building, like Facebook, or building a monster facility. Amazon, same thing, monster facilities down here. And a big thing that's attracting people is one, the affordability of housing, and then two, the talent that's back here. We have some great universities back here, and the median age is a younger demographic. So when these companies are coming in or analyzing spots to put their headquarters or build new facilities, the Midwest has been a big growth for that because of those factors.
Yeah, absolutely. I mean, there are 7 Fortune 500 companies in Omaha, Nebraska.
Yeah, it's wild.
So it's
Considering how small Omaha
yeah, it's just under 500,000 people. Omaha itself. So to have that big of companies and that much, let's say, money in that area is significant and insignificant to the overall housing market and rental market. So that's an attractive piece for sure. You mentioned on universities, there's always a flow of talent. So people that are going through school, but also people are continuing to come into the area naturally through school. And guess what? They also want to just stay and live where they just went to school or not go too far from there. So there's a natural flow of people coming in that if you don't have the university, it's not necessarily so natural of people, I'm going to school, I'm going to Omaha, I travel into the area, and now I want to stay after kind of naturally because I went to school here, my friends are here, there's businesses here that are recruiting. All of that supports the overall economy.
Yeah, and even though enrollment in colleges has been going down the last few years, colleges in Omaha, Lincoln, whatnot. So you have Creighton is a big one in Omaha, University of Nebraska, Omaha, University of Nebraska of Lincoln. Over the years, those guys have been expanding quite a bit. And if you haven't been to some of those universities in the last 4 or 5 years, you would go and walk on campus. And for me, there was Creighton. I hadn't been to Creighton for a long time. Then went on campus, and dude, my mind was blown how much they've bought up and how much new stuff they're building. So yeah, they're definitely growing and bringing in more and more talent into the Midwest. And like you're saying, a lot of these people are starting to stay. And that was an issue a while ago is Nebraska, at least in some of these areas, people would go to the universities and then they'd jet out of state because there's better job opportunities out of state. But now with all these bigger companies here and bigger companies moving here, you're seeing a lot more retention of people staying here.
Yeah. And you can just drive around Omaha and see the development happening and has happened ever since I've been traveling here consistently since 2017. It's 2023 now.
Yeah.
So over that 6-year period, it has substantially changed. Some of the areas are just completely renovated, completely redone. There's a huge flow of money from developers going into like the Blackstone area, the Benson area. Yeah. So downtown area, the old market area, all of these little hubs that are getting a ton of money pushed into them. And with that, naturally, people want to stay and enjoy those areas. It's becoming a lively place for younger population, and that's a huge demand opportunity.
Yeah. So I know another thing that attracted you, since we talked about it a little bit beforehand, was the landlord-tenant laws here compared to places like California and whatnot, if you want to touch on that a bit.
Yeah, it's night and day different from California. You hear horror stories of not being able to get people out of your house. It is so tenant friendly that people were, COVID was one of those scenarios, but even pre and post COVID, it is a challenge to get people, long-term renters, out of your house. Just at the fact that somehow it turns into, even when they're not paying you, oh, but this is their house and this is where they need to live. It's like, well, actually it's my house and you're not paying me rent. Yeah. And there's this perception, it just drives me nuts of like, oh, this kind of like wealthy, big bad landlord sort of situation. And in reality, most landlords are actually just, I'll call them mom and pop landlords.
Just have a few properties.
Maybe they inherited a property and now it's a rental, or they moved and they're using that as a rental. And when you don't have income, you still have to pay your mortgage.
Yeah.
It's not like, oh, the mortgage said, oh, okay, I'm good since you're not getting any rent. Like the bank says, you know what, like
we're good. Yeah.
We're good. And there's no interest if you are pushing out payments or anything like that. It's fine. California says it's fine for the tenant not to pay. So why not you just not pay me too, right? It seems silly. Yeah. Well, it's ridiculous. So there's a lot more friendly tenant landlord laws or landlord laws to get tenants out that you need out here in Nebraska than in California. It's night and day different.
Yeah. As of right now, things always change all the time, especially after COVID, things have changed up a bit. But as of now, you can serve a tenant a 7-day notice if they haven't paid rent. You serve them a 7-day notice. There's some things in there to where you got to prove that they've received it and whatnot. So that 7 days is really kind of 10 days. After that 10 days, then you can file eviction. And right now the courts are about a couple of weeks out from going from hearing court cases involving eviction. So really in the scheme of things, you're looking at roughly, let's say 3 weeks by the time you give the notice and then you can actually go to court to evict a person. So let's say 3 to 4 weeks, you can evict a tenant out if they're not paying or whatever they're in violation of lease of. Where states like California, that can easily be, like you said, 4, 5, 6 months, a year. And it seems like California, hearing some of those stories, and this is kind of anywhere, but some tenants know how to work the laws, and somehow, let's say, I don't know what California eviction laws are, but let's say it's on average takes 3 or 4 months to get somebody out. Some tenants just know how to work the system to where, hey, it's 3 or 4 months, but I'm going to work it and I'm going to be here at least a year. And like you said, for just mom and pop investors, that can crush you. That can literally either bankrupt you, wipe out your retirement. It's huge.
Absolutely. Yeah, it's disastrous. One of the key reasons I went with short-term rental in San Diego, along with just profitability within short-term rental, but there's a lot less risk of dealing with squatters and some of those challenges with short-term rental than and tenant laws, tenant rights of being, this is my primary house, my residence, in long-term rent compared to short-term rent. It's, hey, they're coming for vacation. You really have no rights of staying in here. Get out of my house. Yeah, you haven't paid me. Get out of my house.
It shouldn't really be that easy.
Right. It should be pretty basic and simple. But yeah, I guess kind of going back, we had talked about as well the financial stability within the Midwest. Maybe you want to touch on that a little bit, of like what you saw during, for instance, the '08 crash, in comparison to what, let's say, the West and East Coast saw on the outsides of the U.S. Midwest was pretty stable.
Yeah, that was a big catalyst, honestly, for me to take a harder look at investing in the Midwest, because it was so stable. Was back again down in 2008 when shit was hitting the fan. Values plummeted in Phoenix, Arizona, 30, 40, 50%, where literally you would be in a house that's valued at, let's say, $300,000, and within a matter of a few weeks, you would start to have foreclosures popping up, and these foreclosures were selling for $100,000, $150,000. So your values plummeted, the equity you had in houses disappeared, and it was pretty wild. There was houses that were selling for $20,000, $30,000, $40,000 during the recession that are now worth $300,000. So it was a fire sale, and things were bad. Where in the Midwest, again, having ties back here, really wasn't deep in the market here in Nebraska by any means, but having ties back here and talking with people, Nebraska really didn't get hit at all. Values really didn't go down. They definitely weren't going up, but they stayed steady, and that's huge. You can go from having a rental portfolio, let's say in the Southwest at that time, having a rental portfolio worth millions of dollars, to within a few weeks, months, whatever that was, to being upside down, having to fire sale everything, getting stuff foreclosed on, and really all that time that you build up that portfolio, your wealth has disappeared, and you're in a completely different financial situation compared to in the Midwest. Again, things weren't appreciating, but at least you're able to maintain what you had. So for me, that was a huge catalyst, being like, oh man, everything's cyclical. Not saying we're going to see something like that again. Land use standards were way different back in the day, which had a big reason why we got to the point where we're at, but things are cyclical. So at some point in time, values potentially will be going down in certain areas. You've seen this rampant increase in housing prices over the last 4, 5, 6 years. Appreciation's kind of gone bonkers again in certain areas, where Midwest, sometimes you don't have that appreciation like you would maybe in the Southwest. Stuff is definitely appreciated back here, and values have continued to go up. But again, when stuff starts to hit the fan again, being in the Midwest and having a concentration of rentals here, you'll definitely be safeguarded a bit compared to other markets.
Yeah, you don't see the massive swings up, but you also don't see the massive swings down, right? And that stability is the sexy piece.
Absolutely.
Right, that is what makes the Midwest one of the sexy parts of the Midwest.
Yeah.
Anything additional there that you're thinking about? Otherwise, maybe what are some of your key takeaways?
For me, is a takeaway would be, again, kind of going back to affordability. Probably said it 100 times this episode, but I think just in the Midwest in general, it often gets overlooked. Nebraska is often called a flyover state, where you're not really going to Nebraska. You're flying over Nebraska to go to somewhere else. And that's applicable for a lot of places in the Midwest. But really, at the end of the day, the affordability, it's so much easier to get started in real estate, and or if you're wanting to build a rental portfolio of, let's say, single family houses, it's so much, I don't want to say easier is the right word, because there's a lot of work that goes into it. But
Yeah.
the barrier of entry is a lot lower just because of those price points to get in there. So when people are thinking about starting investing, we always recommend starting in your own market, even if you're in a market like in San Diego where things are way more expensive than other places. Always look in your market first. But if you're looking to go outside that market, again, the Midwest is definitely attractive.
Yeah, absolutely. It's that barrier of entry is an important piece of that. And what's your strategy? What are you trying to do? Then the cash flow. It's just so significantly different, the numbers, when you're looking at a property that you buy it. Mine was 63 grand when I bought that first, right? Yeah. And I'm cash flowing a few $100s a month. I'm watching the whole process, learning the whole process, and I could slip up in certain areas, and I'm comfortable, I'm happy. The property, if it went down a little bit, I hold on to it because it's cash flowing.
Yeah.
If I'm banking everything on appreciation, or if I'm so tight on the overall cash flow, it's tough for me to then sit and wait for the market to turn. As you mentioned, it's cyclical. So if things went down a little bit, to me, when I'm cash flowing, I don't care.
Yeah.
It can go down 20%.
Yeah.
My home value.
Yeah.
As long as I'm cash flowing, because I won't sell. I'll hold on to it because I know it's going to go up and do well for me. And when it's gone up now 20% again, 40% overall, then maybe that's the time for me. And all of that time, I'm continuing to collect rents, pay down my mortgage, all of that.
Yeah, I think you saying strategy is definitely another big benefit, is being able to have multiple exit strategies when you're looking at a certain investment. Again, when you're in different markets, let's say Southwest, California, when you're at those higher price points, like I said earlier, you can't really cash flow that to where if you're buying a $100,000 property here in Nebraska, you can cash, or if you're trying to go in, let's say, let's flip that property, but something goes wrong, you can't flip it, it's out of budget, it doesn't make sense to flip. Well, now you have a backup to where more than likely you can probably cash flow that thing a bit and have the debts be paid down and sell it in the future. So again, going back to affordability gives you more exit strategies when you're looking at investments. Yeah.
Like for instance, it took you 6 months. Maybe it was end of last year where all of a sudden rates got jacked up.
Yeah.
And you didn't see that coming. You were flipping it, planning to flip. And all of a sudden you realize, oh crap, like I'm going to be underwater. I'm going to lose a bunch of money on this flip. Well, why not just rent it out and refi in? And if you've had hard money or private money or something like that, use a longer term loan and then cash flow on it. And I'll call it wait on the sideline until the time is right. And that's now your new exit strategy. So yeah, you're right. Coming to the table with multiple exit strategies is important. Yeah, critical.
Yeah.
Awesome, man.
Cool, bud. You sounded halfway decent.
Thank you. Appreciate it.
People might think you might be smart.
Thanks, Mark.
I don't think so, though.